Hey traders, welcome to today's presentation. This is from Shark Indicators, and today I'm going to talk about some performance characteristics that you want to look for when building an automated trading system. And to kind of demonstrate, I'm going to use this simple system that I learned at one of those trading seminars, at your local big hotel, and it's a pretty simple system that uses a moving average, a standard stochastics, and a fairly standard MACD. You can see the periods here are just the standard default periods. All right? And I will kind of discuss the details of this system later on. I already have two strategy analyzers from NinjaTrader already loaded up, ready to go. And so you can see I have a few stocks here selected, kind of selected at random. Some of them I kind of weeded out just to help with my example today. And so what I want to do is just kind of go through performance characteristics of this system here as an automated trading system. So let me kind of show you. So here's the name of the system. It's just, I called it the classic stock signal. And it's an always in system, so I'm not using any profit target or any stop loss, so it's always reversing, always in the market. You can see I'm starting from the year 2000 to current, and we're using daily bars. And so let's just kind of go through some of these characteristics here step by step. So the first stock here is Intel. And this guy, I mean, look at the performance is 99, right? There was no loss. It was all profit, but we can see that it only took 3 trades. So right there, that kind of raises a red flag. 3 trades I wouldn't really consider giving you any kind of meaningful data, right? The next stock down is Lockheed Martin. We can see it took 5 trades. To me, that's kind of borderline. I would like to see twice as many, but it did do pretty good. And what I have down here is I have the graph. This is the equity curve graph. And one thing I did like about it, even though it didn't take very many trades, is the nice stair stepping up. That's a good characteristic that you'd want to see as a general rule. Fleur systems, I don't know what they are. However, it's got a great performance. The number of trades is pretty decent. It's about 1 trade per year, a little over. Let me see, it started trading in 2002. Once again, it's stair stepping up. NIHD, which is NII Holdings. This has some great characteristics as well. It's stair stepping up. It only took 10 trades. So just to remind you guys, this is not a day trading system, a discretionary stock trading system that I've chosen to use to illustrate an automated trading system. So just remember, this is not for day trading. Let's see. Let's take a look at GE. Threw GE in there because it's been around for a long time and it's a fairly steady stock. Even though it's profitable, didn't take very many trades, only 7. But look at this huge dip down. That's a huge warning sign there. And then luckily it ended in a profit. Next one we have here is ExxonMobil. Only 9 trades. It did end with a small profit. But look at the characteristics of the trades. It's just chopping all over the place. At one point it did make some good money, but look at that pullback. That, put you in the negative, put you in the red, before it turned around and gained back some of its losses. Hopefully, if you take the time, you can tinker around with this, and who knows, this might turn out to be a good stock to trade with this system, once you've applied some money management to it. The next one here is Seagate, a technology company, and that's a loser. Poor movement on the equity curve. The next one here is Seagate. You know, now we're starting to get into the losers. Really not much point in looking at these. You know, these are going to need some more work before at least I would consider working with them. That's Bank of America. You know, this one, yeah, who knows? This one, you know, it's just chopping up and down. It's not a straight line down like Seagate was. You know, Seagate just kept stepping down, stepping down. Bank of America, you know, was down, then was up, down and up. So maybe some money management rules and some stop losses might help this one out. So it could be salvageable. And KO is Coca-Cola. Really, it just kind of looks like you know, this trading system just doesn't like Coca-Cola at all. Pretty flat. Not very many trades. Next, I'm going to switch over here to the same system, but I've tweaked the periods for the stochastics and the MACD. I made them a little faster, so that way they synchronize better with futures instruments. But I did apply it to the stock basket here. And let's kind of take a look here. So, you know, a combined results here of 23,000 basically, as compared to 27,000. So this obviously did a little better, but you know, look what happened here. Seagate is up here on the top performance. Let's take a look at the graph. You know, still I have a kind of some caution about this, even though it's the best performer, because look, halfway through the test period, it's just really kind of chopping around, you know, and then finally it starts making some money here. Interestingly, after the financial crisis is when it started making money. It's kind of weird, you know, and during the good times it wasn't making money. So after we get out of this financial crisis, who knows, this system, as you know, as is, could start losing money again. You know, or it could just start chopping around, essentially just kind of wasting your time. Let's take a look at NIHD. Still some nice stair-stepping. ExxonMobil, you know, it's third down. Yeah, once again, it kind of looks like Seagate. It's just chopping around, you know, and then it finally starts to make some money. You know, so I'd be kind of cautious here. You know, maybe give it some time. You can work with it, make it work out. Next, we have Lockheed Martin. You know, this is not too bad. Stair stepping up. The last couple of years, though, it had some issues. You know, once again, maybe some money management can help with that. Now, Intel was on top in the other strategy analyzer, but here we can say it got one huge trade up, and then it just chopped around the entire time. So definitely the settings for the stochastics and the MACD just don't work well with this instrument. Next, Coke. Coke did a little better, but well, once again, that's pretty disastrous beginning, starting off. But afterwards, you got to kind of like the stair-stepping up on that. And so we can see changing the cycles of the stochastics and the MACD just aren't working with Fleur here. Huge drawdown. GE still not doing very much. I don't remember back here, GE just wasn't doing very much. And again, so maybe GE just isn't the right instrument you want to be trading with this system. And Bank of America is still not doing very good. Alright, next let's take a look at let's compare these system on the futures basket here. So we'll hit the run back test. So remember, this system was set up for stocks. Let's see how it does on futures. NQ does the best, but once again, for not very many trades. The Japanese yen, US dollar, 10 trades. I don't know. That's kind of questionable still. If we look at the combined results, we can see it did a lot better, but also remember that futures have a much higher leverage than stocks do. So let's kind of look through the graph here. Not much trading. Stair stepping is, looks okay. Oil, yeah, that equity curve just looks horrible. The YM, a big drawdown in the beginning, before it got itself back up to profitability. And not a very good looking equity curve. Wow, no trades in the beginning for gold. The euro, yeah, disastrous. And the ES, well, the ES that's a pretty random animal there. All right, let's take a look at this system that I didn't take a lot of time. I just kind of did some quick changes and kind of found something that looked good. So let's run it on the futures. And here we're basically at 100 grand. Let's kind of now look at this. The 6E is now on top when we sped up the period of the stochastic and MACD. And this stair stepping looks pretty nice. We did get a flat area, and hopefully some money management can help that out. And Q, it's a nice move up and then nothing, just flat for about 6 years. The ES used to be on the bottom. Nice beginning, no trades, but wow, got to be cautious of this trailing off here. YM, yeah, these kind of things we definitely don't like to see. Need to somehow prevent these big drop-offs. And the 6J, that's just total randomness, up and down, up and down. Definitely the stochastic and MACD periods don't work well with the 6J at all. Oil, pretty steady decline down. So I guess kind of the bottom line is, tuning the period of the stochastic and MACD to the instrument does help out the system a lot. Just as a reminder here, let's take a look at the chart. These are always an all-in system. Right, so we can see it went long, reversed short, reversed long, then reversed short. All right, that kind of helps you tune your system a little bit. So now let's run this again without a stop loss, so we have a basis point, a basis to start with. All right, Intel up on top. So let's see if we can improve. See if we can improve these. So I'm dealing with ticks here. So 100 ticks is basically $1 in stocks. So $1 stop loss, you can definitely guesstimate that is pretty tight. And look at our combined, and now it's down to 9,000. So definitely $1 is way too tight. We'll jump it up to 2. See what happens. Made it even worse. Let's jump it up to 4. Now we're kind of close to where we were before. So just a reminder, let's set the stop to 0. So we're at 23 almost. See what happens with the $6 stop. There, we're kind of back at break even. And if we look now, we only have two stocks that are showing a loss. So that is a bit of an improvement. Let's just throw $10 in there. Now we're just allowing too much of a stop loss. You know, now we're starting to lose ground again. So let's take a look at the other system. And we'll switch over to the stocks again. See how this works over here. So 17. Let's go back to our baseline. So we're at 27. You know, so the dollar stop is just too tight. Now we're at 17. Now we're up to 20. We're doing a little better. I didn't really go anywhere. Still at 20 with the $4 stop. See what 6 does. Just really seems that the flat stop just isn't really helping too much. So I'm having to kind of go through this pretty quickly. So you'd want to go through on an individual basis and kind of see you know, how it's improving the individual stocks. Take a look at the equity curves. Yeah, it's good to look at the chart too, just so you can see kind of, you know, how the instrument moves. Just kind of see how the cycles of the instruments, you know, are, how they behave. And unfortunately, that's kind of all I have time for today. And next week, I'll explain how the system works, you know, what the conditions are, and how easy it is to change those conditions using Bloodhound. All right, we can go in and change some of the periods and change some of the other requirements that I'll explain as well. Thanks, guys, and have a great week. Bye.